Hello, welcome to the weekend stock market review. It's the week of March 5th, 2023. Let's get right into it. Let's take a look at TLT, the bond market. No doubt we continue to have strong economic data, and not a surprise that TLT has retreated from the 107, 108 level down to this level. I'm comfortably selling puts the last 2 weeks at the 99 all the way down to 97.5 level. I had 3 that expire worthless Friday, and I have 5. Currently, I have actually 4. Currently, I have 4 outstanding puts expiring this Friday between 98 and 97.5, and I don't have any problem um, getting them assigned. I did get a couple of puts assigned the previous Friday. That was then I wrote a cover calls on them, and then the stock was called away. So it was a successful trade, regardless. Let's jump right in. So as far as TLT, I'm not adding any share. I will continue to sell puts below, um, and I'm comfortable doing so. I don't think TLT is going to revisit the 200 MA up here or even the 50 MA unless the econ data support that. Okay, so no need to rush into buying TLT. It is a low maintenance trade. The one put I got assigned 2 Fridays ago was Google. I had a 90 put that was assigned and I was okay. The average was like my cost basis was something like 89.5 or below. I wrote a cover call at 91 for 50 cents, so the share was called away. Fine by me. Overall, it was a good trade. I do have other position in Google, regardless. So that extra 100 share was just a put that I didn't mind getting assigned and then get called away. I got another put that was assigned and called away. It was Occidental Petroleum. I got a put at 60 that was also assigned 2 Fridays ago. I wrote a cover call at 61, and that was also a successful trade. I wrote every week I sell a lot of puts as well as put spread, and occasionally I have a week where a few position is underwater, and depend on what the stock is, I either roll them down or out or close them out at a loss or let them be assigned. And 2 Fridays ago, I didn't mind getting 3 of the puts assigned and then exit with a gain on all 3. Not a bad trade at all on those. Take a look at SPY. Certainly a nice move. Okay, this was ugly. But if you bought the low here on the 200 MA, you did well. I don't think you want to stick around and expect the market to bounce like the way it did up here. Okay, so if you went long, certainly look to trim your profit at the 20 MA. It's all depend on econ data, right? Keep that in mind. The econ data is what's driving the market right now, and I believe, let me take a look, but I believe the CPI data is coming out this week. Let me double check, because that's going to be the big driver of the market this week. So be careful. We can have some serious volatility. Let me take a look at the calendar, the econ calendar, and see what is on the plate this week. I expect the CPI data to be not as weak as expected, and the Fed will come out as hawkish as they were last month. Let's take a look at the calendar. What do we have here? On Monday, we have factory orders. Nothing big there. On Tuesday, Fed Chairman Powell. Okay, at 11 a.m. wholesale inventory. Yeah, that's gonna be important to pay attention to. On Wednesday, we have MBA mortgage, a whole bunch of mortgage data coming out, application, refinance, all that stuff. Of course, Powell is testifying again. It's a 2 days. Oh, and then the job report, the JOLTS. Okay, so um, Wednesday is a big econ day. We get jobs, mortgage, and power, as well as crude oil, inventory, production, gasoline, all that stuff. So big Wednesday. And of course, let's see, we have Thursday, jobless claim, challenger job cuts. That's another big day. And then Friday, we have, I guess I was wrong. I think that Friday we have non-farm payroll, unemployment rate. That's big too. All of these will wait on the Fed decision on how much they're going to raise. So CPI, not yet, perhaps the week after. But a full plate of very important economic data coming this week. So keep your head on a swivel. Don't go all in on anything. It's play small, play light, be nimble is the strategy. It has been the same strategy for quite some time. So nothing I'm saying here is new. Okay, nothing. I have not changed my strategy as far as trying to be nimble. The QQQ, similar bounce to the S&P 500. You get the 200-day moving average tested, and then reversal, and then it got right to the 20 MA. So it's a little bit higher than the S&P, but if you went long Thursday and you didn't sell yet on Friday, if the market went positive early on Monday, I would say it's time to sell, time to trim. Okay. All right, let's jump into some sector. I wrote some puts on healthcare, ELV. That was an ugly move here. I wrote the put spread. I sell put spread down here, 455 for between 455 and 430. I got, I believe, 2 put spread down there. I also wrote one on UNH. Same thing. Okay, the UNH and Elevance ELV are very similar. For UNH, I wrote 460 and below. So I have this support here to hold me, but 460, 440 put spread with the risk there. When it comes down to other health insurance like Humana, certainly I think less attractive on the valuation basis as well as technical. Right now it's hanging on to the 200 MA, but if you want to play Humana instead of UNH or ELV, play down here, okay? Down here. Don't, I wouldn't risk it up here because I think it can give. If the health insurance sector gets sell off, it's gonna give something with Cigna, the other one that I don't talk about much. Oops, wrong one. Wrong symbol, Cigna. Cigna is at the key spot here near reference low, right? This spot, this area, it was resistant, breakout, and now it's failing. So I say be careful. Where? Down here, okay? Between 281 and 273-ish. That's the spot that if you want to sell put spread down there, that's the better. Okay, so overall, Humana is the least attractive one in my opinion, even though some people may look at the chart there and say it's at support. Support can fail. Okay, if this sector is getting the sell-off, it will fail. Pepsi, crazy move. I was looking to buy more down here in the 168, 169 channel low. I had ordered down there, but it did not quite get there. But for now, just keep watch. Okay, I think there's going to be some volatility here. I think there's a chance to pick up more Pepsi down here in the 168, 169 level. No need to chase here. No need. Let it come down to you. Coke. I was adding to Coke. Every time I see Coke below 59, it's a no-brainer, right? Anything near 59 is a no-brainer. Same thing. I will, if I see a dump, I will place order 59 and lower and grab a few shares. Not a problem here. Okay. If this failed though, if the 59, 58 level fail, which is going sideways, the 20 MA is coming down. It had been selling off on the 20 MA, as you can see. Look, when it crossed the 20 MA, it was a bullish move, and problem here, and then give, and then guess what? The 20 MA has been the resistance. Best thing for Coke to do is what? Go sideways, let the 20 MA flat line, and then it can break out easier. Okay, we can have one of these. You don't want one of these. Okay, you want sideways. So even though I'm adding 59 and below, I'm adding very small. Patient, people, patient. I have not added to McDonald's because it's still staying strong. No need to chase it here. If there's sell-off at McDonald's down here to 58, I would buy at a 200-day moving average, but for now, it's a no touch. Speaking of McDonald's, CMG struggle, but it did bounce with the overall market. I will patiently wait for CMG to break support and sell put down here. I've been talking about that before. No need to chase CMG here, okay? No need to. Let it be. Mondelez, stubbornly high. No need to chase it. No need to chase it. Let it be. The other consumer staple, of course, is Kraft Heinz. Would I add to Kraft? I have not been in it for a while. I sold out on this move up here, okay? I bought on this ugly move here, and then I sold out on the way up. Now, would I sell puts at 37? Yeah, I might, but would I add share if I see 38 and below? Maybe, okay? So I'm gonna keep watch on that. If I see KXC down here, 38-ish, I might buy a few shares at support. Banks. I added to Bank of America. Yes. That was ugly. That's one ugly wick, but for those that caught this down move, you're doing okay. Key spot here. Okay, the 200-day moving average. So I'm waiting for it to clear and then test it, support, make sure that it can hold the two. I would like to add a lot more if I'm confident that this is the near-term low. But I like BAC here when it comes down to exposure to banks. I mentioned last week that I like BAC. I still like it here. I'm looking for entry on a much bigger position. Goldman Sachs, I wrote a bunch of put spread. One was a money loser, but I'm glad I kept the other three. Hey, if I knew it's gonna have this kind of big move, I would have kept all four and make even more money, but that's okay. Would I sell more put spread down here in the 340, 330 level if there's enough premium? But for now, I don't mind playing Goldman Sachs down here. It was an ugly move since earning, right? Ugly move. But it's much more attractive than most of the other banks like Wells Fargo. Too high. No, like I said, JPM, same thing. Near resistance, see? It's at, if you had JPM, if this doesn't tell you that It's not much to go. Nah. Let's take a look at the credit card. I haven't talked about credit card in a while. AXP, no. Okay, no need to chase it here. No need. Where would I buy? I would love to buy at the gap fill down here. But at the minimum, I would say I would sell put or put spread at 160 and below. Wait for it to come down. Okay, no need to chase it. Visa, same thing here, right? If this fail, would I buy Visa at the two? Yeah, down here. I would sell put down here. Okay, no need to chase it up here. No need. Same thing with MasterCard. No need. It's in no man's land here. If it come down, if the market sell off, 100 MA, yeah. 200 MA, yes. Just wait. Okay, Target. I had a couple of put spread that expire worthless, so winning there. But for now, I have no position in Target, Walmart. I have a put spread in Costco, which I will talk after this one. But for now, kind of like no man's land. I would wait for it to, if I see 162, yeah, I would add share. I would sell put spread at 158 and below. I like to, play it way down here. That's what I have been doing. Costco. The growth in Costco is gonna be weaker and weaker and weaker going forward. Okay, the comp is gonna be a big problem for Costco already. The past few quarters, if you pay attention, for those that follow Costco for a long time, which I have, during the pandemic, and even through the early part of 2022, Costco was doing crazy numbers. Okay, crazy number. You're talking double-digit percentage growth month, comparing year over year on each month. Consistently, it was doing crazy 10% plus for a long time. But if you pay attention, over the past 6 months, it started to fall below the 10%. It started to get into the 9, the 8, the 7%. So yes, year over year comparison on a monthly basis that Costco put out the first few days of every month is showing weaker and weaker and weaker growth. Eventually, you will not see growth. That's going to be an ugly moment. So pay attention to that. I like Costco, but at the same time, this channel is done. Okay, the channel, the long-term channel, it's out. It's no longer in that channel. So there is a down channel that it's going to be in now. So if you go back 5 years, see, look, it was a beautiful move up of the pandemic, right? Not anymore. There's a new channel in town, so trade the channel, right? So this was a downtrend. You can do even different channel if you want. You can draw a trend line, but to me, Costco is a better risk player on the gap fill down here. That's what I have been doing. Okay, last week I saw a couple of put spread down here, and this week I'm doing exactly the same. 455, 445, 455, 435 put spread down there. No need to chase it up here. It would take a lot. What would be the driver for growth at Costco? You tell me. Okay, it's I don't know. I don't know what it is. Let's talk about oil. I haven't done USO. All that bullish talk doesn't matter. Okay, it doesn't matter. USO, I have been saying for quite some time. For those that follow me for a long time, 71 is a tough area, tough resistance, and it can't even get there. It barely get there. Back here in early January, when the market was bullish and everyone think that the bottom is in and the economy is at the point where the Fed is going to pause. Well, guess what? They're not pausing. So uh, you don't hear a whole lot of bullish talk. Well, you still do. You still hear a lot of bullish talk on oils still. And to me, the best play on oil is, of course, sell puts or put spread whenever you see it down here in the 64 and below level. I think this is a key area of support, as you can see, 64 and below, right? Sure, did it dip down to 61? Yes, but that was a quick rip higher. So to me, anything between 64 and 61 is a better area to buy share on USO or sell puts. No need to chase it up here. None whatsoever. Let's take a look at some FANG spread on Microsoft on the dump, and that was a winning trade. What would I do? Same thing. If I see any kind of weakness, I don't mind selling put spread in a 240 area using the 100 MA and the 50 as my protection above. Yeah, no need to chase it here. Okay, no need. Apple did well. Nice bounce on Friday for Apple. It was ugly. Anytime when Apple is below the one, this right here, okay, see this area, this key area of resistance, Apple had a real hard time staying above it. See, sure, this big move, nice, but then once it give, once again, resistant, and it barely hang out there for 2 weeks, and now it's back. So depend on what the Nasdaq do. If rates go higher, if Powell stay hawkish, and TLT and bonds go up, yield go up, well, guess what? Apple is not going to be able to break and hold. Okay, it's going to trade sideways or below this. It's a frustrating trade for those that buy Apple long and stay long. Trade. There's plenty of room to trade. Same thing with Meta, right? I was looking for Meta to go a little bit lower to buy. I was looking to sell Meta put at 160 and below into the gap fill. It looked like I could have, you know, it was on its way when it was sliding after the big gap up. It was sliding way down here past the 20 MA. Excuse me. It was looking promising. And then you have Friday, which I do have a position in it, but I look to repurchase what I sold up here. So for now, do nothing. Just wait. Wait patiently for it. CRM, I had a position. I sold on this pop between 191 and 194, I believe, or 192. I sold some on that earning day. Would I buy it back? I would rather sell puts down here. Okay. The better play is to sell puts, say 175 down to 165 put spread. If I'm willing to buy back the share that I sold a bulk of the share. Well, I say more than half of my share on this move here. And then I watch and wait to repurchase, and I didn't. And then it gap up, so I sold some more, and I would certainly look to repurchase 175 and below. Okay, I would. I already talked about Google, but what I do with Google here, sell puts. I would do the same thing. I would sell 90 puts. If it get assigned, that's fine. Okay, sure. Can Google get down to 85, 88, 83? Yeah, but I don't mind. I don't mind owning the share below 90 or even in the mid 80s. Okay, to me, that's the risk reward is to be long on Google mid 80s. How about Amazon? Amazon, similar. Okay, I wouldn't mind selling puts in the mid 80s and get assigned if that happened, because I think there is money to be made on trading Amazon in this area. certainly I wouldn't be buying it outright here, right? If the market dump next week with all the econ data, my plan next week is to not do much on Monday, but wait until the econ data on Wednesday and Thursday for sure. Those are the two big days on econ data that can move the market, and I think the econ data is going to be stronger than what people want to see. So the market is going to, the bond market likely will test again as far as yield going up. So for me, with my position in TLT, I'm not going to add any more to my puts on TLT as far as selling the puts. I'm going to wait for the dump on Wednesday or Thursday and then sell 97, 96 put for next Friday. Should there be a pop in rates again, because there will be lots of juice in 97 puts. If TLT drop below 100 again, as it did a few days ago. Let's see, on the one position that I did sell a put spread expiring on March 17 is LH. I'm watching LH here. I like LH. Would I buy LH outright down here at the 230, 220 level? Yes. I like LH. DGX, which I also like. I had some order in on this dump here, but just a little bit lower. I had order in at 135. I was waiting to buy at 135, and I will do the same. No need to chase it here. No need to chase it here. I think there will be chances to buy LH or DGX in the back here. Okay, this was support. See, support many times. It broke it. It come back. It resists, and then it break out again. So I don't think that we will escape this area. If the overall market come down, I think we will get there again. Oh, let's talk about drugs. That was ugly. Eli Lilly, that was ugly. Okay, but perhaps the bottom is in. For me, this day was important. I talked about that on Wednesday. I said that I would like to see it finish up here. It didn't, but it was important to break out over the high of this day right here. So nice move. What would I do here? I had plenty of Eli Lilly. I wrote a bunch of put spread. One of them was a money loser. I had a put spread at 320, 300. That turned out to be a loser. But I had 4 other put spread between 315 and below, and they more than make up for that one loser. Would I keep selling put spread down here in a 310, 312.5 level? 300? Yeah. I don't mind adding or using put spread down here. Okay. But it was an ugly week for now. No need to add more to my position there. Pfizer, ugly, but perhaps support is here. We'll see, right? I would love to add more, but Pfizer need to show me a whole lot more. This is one ugly move. I thought for sure it would hold here. This was the area that I thought 46 was the area. Sure, I trim on the way up. I add here. I add a whole lot down here, and wrong. Okay, wrong. So that was a bad trade right here on Pfizer. For now, if it bounces to 42, I probably trim a little. Okay, the 20 MA might be a tough spot. The best thing for Pfizer, to be honest, is to bounce, go sideways for a while. Let the 20 MA come down for an easier breakout over the 20 MA, right? So like this, look, you see this ugly move here? And the 20 MA was resistant, and then eventually nice breakout. So let's hit the same thing, okay? No need for it to do anything more than just trying to go sideways for the next 2 weeks or 3 weeks and let the 20 MA come down. So that to me is the thing to do. FV, which I have not been in, is riding the channel low. Nothing to do here. No need to chase. Would I buy FV? Gap fill. It's wishful thinking, but I want to stay disciplined. No need to chase it here. If you want to sell put, at least sell it at the 200 MA, 147, 148. That might be a good spot, but no need to chase it here. The risk reward is not there on FV, at least not for me. Let's take a look at a few more drugs. BIIB, no man's land. Okay, there's no reason to do anything here. If you long, hopefully you set your stop. If this give, it's been trading at sideways here for a week, right? We can visit this right here. We can visit 250 in a hurry if this thing fail, right? Because it's hanging around kind of like a support area. See, last time on a down move, it reversed here, and now it's back to the same area. And it's the more it tests this area, the more likely it will break. And if it does, then we can see 250. And I think selling puts at 245 or 240 and below is the play. Okay, they have good drugs. Gilead, no man's land. Okay, no man's land here. There's no, it's not, yes, Friday was decent, but nothing to cheer about. Can we see 74? Yeah, where would I buy it? Gap fill. Okay, gap fill. If you didn't sell it up here at 89, you have given up 10%. Hopefully you learn to put in stop, because you had plenty of chances to sell it at 86 or better over the past 3 months. Plenty of chances, and now you're 10% lower. Let's take a look at some medical device. EW. Yeah, if you bought on this support here, good on you. Now we're at a resistance. Okay, I trimmed last week. Right now I'm down to, maybe at one point I had a lot of EW, and right now I'm down to about 60%. I'm pretty sure I have about 60%. What I'm saying is, at the height of this up here, I had 400 shares. I have since trimmed 140 shares, and so now I have like 260 left. If it get anywhere near the 200 MA, you bet I would sell 90%, if not everything. So if I'm not adding, I sell puts where? Down here, 78, 77. That's where I sell the puts. Okay, so I don't mind. This is a perfect position where I don't mind getting a sign again. Some of my on the share that I sold in the 80s, I don't mind buying them back at 77 and below for a trade. Abbott, ugly move here, but nice reversal. It filled the gaps, right? And more. I would look to trim up here, 105. Okay, can't sleep on this. 105. I did sell a put spread on this ugly move at 100 and below. Yeah, so, but I would trim some into the 105, 106 area. Let's see, Medtronic. I would look to trim at the 86 level. Okay, no need to do anything. I didn't add any on this. I was looking to add more below 80, but it didn't get low enough, because I did trim. Okay, I did trim on this move here, and I was looking to add them back below, but that didn't happen. So right now it's a do nothing, but I would definitely sell the bulk of it up here. Let's see, what else can we talk about? Let's look at one of the winner here, ISRG. That's another one that I trade once in a while. I missed this move here. I missed this gap and breakout. I was waiting, watching down here to see if this hold, and then it gap. So missed out on this big run. Now it has retraced all the way back here. So I think if you want to trade ISRG, keep your eyes here. If it hold, if it come back into the 230 level and hold, no need to chase it here. Okay, no need to chase it here. But what I would do is sell put spread at the gap fill below 220, 220, 200. To me, that's the better play instead of like buying the share here. But I like the setup here in ISRG as far as selling put spread at the gap fill below. There's two gap fill, one at the 220 level and then one at the 200 level right down here. So do the 220, 200 put spread. That might be the best play for ISRG. PayPal kind of going sideways, grinding it out, bore us to death. Yeah. Not much to do. Would I sell PayPal if I see 82? Yeah. Absolutely. Absolutely. Okay. Would I exit PayPal altogether if I see 84, the gap fill? Maybe. Maybe. Okay. Maybe. But right now, I just let it be. Let it be. Okay. There's nothing here to see as far as PayPal. How about some industrial, which, yeah, industrial had a crazy move at the end of the year, right? As if like no recession here. Okay, Honeywell, probably the best of the breed as far as industrial exposure. And since then, no recession, recession fear. Okay, so for me, yeah, down here. I've been waiting and waiting and waiting for it to get back. It's getting more attractive for sure. 183, yeah. Keep watching. No need to chase. Now GE had a crazy move, but it is at a multi-year high. I just don't see a reason to be in it. See, look at GE. Wow, right? If you bought GE, congratulations, beautiful move, 20%, 30% return. But you are at the area that it has rejected many times. So I would say it's time to start trimming. Okay, between here and 88, 89, you gotta go. Right? Can it get to 90, the all-time high, going back 3 years? Maybe. But now is the time to start trimming. Okay, the risk is not in buying more. The risk reward now is getting out, trimming into here, between here and 90. Time to go on GE. Now the other industrial that I like is ITW. I trade sometime, but it's also near the all-time high in the last 3 years. Nothing to see here. Nothing to see. Industrial. Honeywell is the cheaper of the bunch. I wouldn't touch ITW here. Not right now. Okay, not right now. CMI, same thing. There's a lot of industrial that I like, but right now it's not the time. Near the all-time high, 3-year high. No way. How about rail, CSX, transport? We haven't talked about transport stuff in a while. It's okay, right? It's okay. It's riding a key support here. It's been, so the risk reward is not bad. what would I do? I would rather sell put at 30 and below. But the rail is okay. It's nothing. The risk reward is kind of even Steven here. The upside is not a heck of a lot. Okay, at 31 something, the upside is perhaps 10% higher. The downside is maybe 5% below, kind of thing. So it's okay. It's not a bad spot to buy if you want to buy, but at the same time, I'm just like, there's such better stocks out there to trade for now. Since we're talking transport, UPS, yeah, no touch for me. Okay, would I buy UPS at the 100? Yeah, down here, but not here. Okay, it's in no man's land, and really it's near the spot where it has sold off twice in the last 4 months. So yeah, I buy down here. In fact, I would rather sell put spread at 170 and below. You have a lot more room to protect yourself down here. FedEx. Oh, no dice. Okay, I wouldn't touch FedEx here. No way. I would rather you. FedEx is way more way less attractive than UPS at this level. I wouldn't touch it. No way. Not in a slow economy. No way. Okay. Last, JetBlue, still hanging around. That's okay. It's riding the support. It's okay. Like I said, I don't need to add. I would like to see a bullish move, confirmation to add, but for now, I don't mind to see it keep going sideways until this channel low, the down channel, meet us in about 2 weeks. Okay, in about 2 weeks, I think the 200-day moving average is gonna kind of flatline a little bit more. The 100 MA, the 50 MA is still rising, which is good, but there will be a spot in 2 or 3 weeks where everything is going to converge into a big area that could give it a big boost if it can break out. So I patiently wait for that day. If I want to add, I just need to see that breakout, okay? Because I think when and if we have the breakout on JetBlue, it could be a big move, like maybe from here, 8-ish level. It can be a run to the low teens, okay? So that could be a big move there. So I'm just waiting for confirmation. And that's it for this week. Hopefully it makes sense. Good luck trading. Be careful. Wednesday, Thursday, and Fridays are big econ data. And then of course we'll get the CPI the week after, which is even more important. But for now, I am very cautious because I believe the econ data is going to be stronger than what we all want to see. Have a good Sunday.